All right, so you got to watch out for the dark side, right? And I'm not just talking about Darth Vader. I've recently been watching Star Wars with my daughter, which there is a dark side, but Wall Street has a dark side. Tony Robbins wrote a book and just found there was all these misalignment of interests between Wall Street and you. They find a way to get paid even when you don't get paid. So this is the case for alternative assets. I'm going to give you a little bit of background. I used to be a registered investment advisor, which is called an RIA. Now I'm still an RIA. I'm a recovering investment advisor, so I'm not licensed anymore. But I found, I've had my come to Jesus moment.
Come to Jesus.
And I've said, I just can't do this anymore. Once it was like the Wizard of Oz, seeing the man behind the curtain, I just couldn't stop paying attention to it because I saw some of the challenges with it. And I really discovered more about alternative investing. So, which, they call real assets or real estate or other sorts of real assets. I'm going to get into why I love it. I'm going to share a great quote for you at the end. So let's go. All right, so welcome. My name is Bronson Hill. Excited to have you with us today. If we haven't met, I'm the CEO of Bronson Equity. We have about $200 million in multifamily assets like this behind me here. We also are doing projects in the oil and gas space. We're doing car washes, businesses, things like this to provide cash flow appreciation or tax benefits for investors just like you. These are just my opinions. This is not for anything else other than education. So get your own financial advice. So let's jump in here and let's talk about Wall Street's flaws, right? Traditional investing like stocks and bonds. We call it traditional investing. But why do we call it traditional investing? What happened in the 1970s, right around 1970s, late 70s, 1980, they started something called ERISA, which is the Employee Retirement Investment something. It's act, right? It's this act that basically said that it allowed for people, instead of having a defined benefit plan as a pension, that you have a defined contribution, right? So instead of like, I worked for this company for 30 years, I have this pension, it pays me this amount per month, per year, and that's kind of what companies used to do up until the 70s and 80s. And they switched it to all like, well, we're gonna help, maybe we'll put a match in for you, but it's gonna be kind of on your own. And so stocks and bonds since that time have become much more mainstream. So over time, people thought in the past that stocks and bonds were incredibly risky. You go back 100 years ago, so I know it's been a while, but 1929, there was a crash in the stock market that over 3 or 4 years, the stock market went down 89%. So that'd be like if today the stock market is at 40,000, if it went down to about 4,000, right? So just a huge crash. And over the next 25 years, it didn't recover for 25 years from that point. So if that's the case, if it took 25 years to recover, you just go 25 years out in the future now and say, okay, if it's 2024 now, was that 2059 or something? How old would you be in 25 years, right? So there was a time where people would say, why in the world would you ever invest in stocks, right?
Why in the world would that be?
So that's something that, that's a flaw. It's something that people think that it's just going to be great. But, there's a lot of and we're going to get into this too, the misalignment of interest that Wall Street has. You could lose half of your portfolio and they would still get paid. There's a lot of hidden fees that are there, like things like administrative fee, cash drag fee, all these BS fees that they don't have to disclose to you. Tony Robbins says that the average, they'll say it's around, for a mutual fund, is around 1.2 to 1.4%, but when you include all the hidden fees, it's about 3.2%. Which is insane, right? It's way more fees. And then if you have a financial advisor, it's typically 1% to 2% on top of that. Now, this is something that financial advisors, if you ask your financial advisor, they're not even aware of these fees, right? So they're not even disclosing it to investors. They're not disclosing it. The people that are selling these don't even know this is there. So if you look at just doing the math, that's about 4.2 to 5.2%. That's most of your returns in the stock market, right? So huge misalignment of interest, and that's where Wall Street loves to enrich and deepen their pockets at your expense. So what this really taught me is the benefits of alternative investing, looking at multifamily syndication for tax benefits, for growth, for appreciation, getting into businesses and other things that basically, instead of Wall Street, it's Main Street, right? And the returns, you can look at some of these assets, I don't have time to get into it now, substantially higher returns as a whole in multifamily or other assets than the stock market and other things, particularly when you count tax benefits and other things as well. So some real life examples of this. My friend Drew, who was a lawyer, a trained lawyer, and just realized he didn't want to be a lawyer anymore and started doing small multifamily investing, got into larger multifamily and syndication and other things, and just was able to replace his income that he was making as an attorney by doing things within real estate. He loves what he does, right? And so there are many, many ways to do this. There's different ways that we do it. There's folks that do it. But just kind of in conclusion here, Alternative assets, I believe, are a stronger choice for long-term financial security. The one thing is you get aligned interest. So typically operators, like deals we do, we will typically put capital in with investors. Often deals people put in, 2 to 10% of the raised amount with investors as alignment of interest. Even how syndication groups get paid is through split fees, right? There's got to be a certain amount of profits, and there's an aligned interest there, which doesn't really exist much in Wall Street except for the kind of the hedge fund 2 and 20 kind of thing. So you get better returns in general. There's lower volatility. So these are all kind of reasons why I think it's a better choice. Warren Buffett has this quote. He says, "Wall Street is the only place that people ride to in a Rolls Royce to get advice from those who take the subway." Right? So again, we're taking advice from people that are not wealthy. Robert Kiyosaki, one time I heard him yelling just emphatically, like, "Don't listen to poor people. Don't listen to poor people." And he's not saying like, "Hey, just don't listen to it," but he's saying when it comes to financial things, like you can't listen to what your family, your friends, other people say if they're not wealthy. And for me, that was a big deal for me to leave my job and go do real estate full time. I couldn't just listen to my family because they were like, no, why would you ever want to do that? But I'm much, much happier now that I followed basically the advice of friends and people that are entrepreneurs that said, hey, well, this is a great move, and you can always go back to medical sales if it doesn't work. And I thought, well, that's great, really great advice. And so I'm going to share this video with you. It's my favorite alternative assets this year. In 2024, you can check it out, and I'd love for you to check that out up here if you haven't checked it out. And if you haven't joined our investment club, we have some things just really unique that we're seeing that we're really excited about. We'd love to tell you about them. You can check that out in the link below at our website, bronsonequity.com. Click the join button. We'll start a relationship with you. These are not public deals. We actually have to typically have a relationship with you before we can actually share them with you. And we're seeing some awesome stuff, particularly in the business space. We have some new stuff in multifamily we're working on, and also oil and gas as well. So I look forward to staying connected to you. Please do reach out. We'd love to hear anything in the comments you want to share, and we'll look forward to seeing you on the next video.